Alright, gang, so it's your boy Nature, aka Nature. Alright, so we're gonna start up today. We already went through the basics. So and the fundamentals. So it's a few more things that we have to talk about before I can just show y'all everything. We have to get the definitions out of the way so we actually know what we're doing when we trade. Okay, so today we're going to be talking about aggressive trading, aggressive way to trading, and we're also going to be talking about a conservative way to trading too, and what that means. Okay, the trader will typically have a smaller portfolio and be easier earlier into their investments. They'll jump in earlier into their investments aggressively. Aggressive trader strategy involves sitting tight during a period of fluctuation, and like kind of like day trading that, long trading that, sitting, letting it just fluctuate and do what it does. The investor will also have a high tolerance when it comes to risk because you're an aggressive trader. You have a high tolerance when it comes to risk. That means you don't mind your tolerance when it comes to risking your money. It doesn't really matter to you because you're an aggressive trader. You feel like the overall trend is going up, or it's going down, and you feel like you can risk that. You can risk a little bit of money. Your money, actually, it's your money. It's your real money that you're risking. But you're an aggressive trader, and you feel like you have high tolerance. To be an aggressive trader, you have to have high tolerance when it comes to risk. So I just dive in a little bit more about that, so you guys can be, good when it comes to trading and making these decisions when it comes to trading. So, all right. So we have to read. There's no way you can get around that. No way you can get around reading and doing the work. So luckily I do it for you guys, so you don't have to worry about that. So aggressive trading strategies. So learning aggressive trading strategies that can produce high returns in a short period of time. Some traders are risk takers by their own nature, so this aggressive stock trading guide is for them. Additionally, you have to learn to build aggressive stock portfolios along with 3 different ways to trade aggressively. So if this is the first time on our website, team at Trading Strategy Guide welcomes you. Make sure that you hit the subscribe button. Make sure you check them out. Hit the subscribe button so you can get their free trading strategies every week directly into your email box. So aggressive trading is a form of active trading styles which requires new trading tactics. If you don't want to lose your account, if you don't want to blow your account, we will teach you the key trading concepts to survive when you take more risks. When you go in aggressively and you take more risks, there are strategies to avoid you from losing your account, blowing your account. So this is what Warren Buffett, one of the most successful investors of all time, has to say about risk taking. Risk comes from not knowing what you're doing. Okay, by taking a more calculated risk, you can build up your account. But we have a strategy. We have a trading strategy, an aggressive trading strategy, a conservative trading strategy. It's not more of a risk. It's more of strategy. That's what we want. We want you to have strategies, trading strategies. So by taking a more calculated risk, a more calculated strategy, you can build up your account and not lose in the process. You don't lose in the process when you have a strategy. Okay, so this is more psychology, more advanced, that I was going to give out later, but it kind of goes hand in hand right now. So you have to have a strategy and a calculated strategy, a more calculated risk, so you can build up your account and that you don't lose in the process. So this is good news, especially if you have a smaller trading account, and you're just starting off. So most of the trading ideas you'll learn through this guide were somehow used by our team of experts. So it's based on practical experience. Let's kick things off by explaining first answering the question: what is aggressive trader and aggressive investor? So, an aggressive investor, we're going to be talking about the table of content. What is an aggressive investor? When aggressive trading works best, aggressive trading strategies, add to winners, trading more markets, aggressive trading entries, how to set aggressive targets, 1 minute aggressive stock trading strategies, 1 minute scraping strategies, and final words, aggressive stock trading. So what is an aggressive trader or aggressive investor? So an aggressive trader or investor is someone willing to take on a higher risk in an attempt to maximize their profit. Very aggressive are comfortable with withstanding large drawdowns. Okay, if they can capture more gains. Okay, they're cool with the pullbacks and the drawdowns if they can capture more gains. And we're going to teach you strategies, you know, to how to capitalize off of, drawdowns and stuff and pullbacks. So the key characteristics of aggressive investors can be summarized in three elements. Open to more risk. So aggressive traders are they're open to leverage or bigger position sizing. So aggressive traders have to do with their leverage. How big is your leverage your account is? And I teach you in OnlyFans that your account and your leverage should be at 500. That's the biggest leverage in the account that you can use when it comes to trading. You want to use the biggest leverage and the biggest account size that you can use when it comes to trading. That's the first thing. The second thing, which is it should be 500. When you go into create your account, which I teach you in the OnlyFans, when you go to create your account, you have an option to put 100, 500 is the highest leverage that you can, so you can leverage your account more and more on smaller account sizes. You have your leverage at 500, so it allows you to trade and risk bigger proportions of sizes, like because you have higher leverage. Your account is at 500. That's the highest leverage you can go. So it's about leverage. So they opened up their use of leverage, and they also opened up their use of a bigger position sizing. So what I mean by a bigger position sizing is they're meaning that your position sizing you can trade from zero point 0.1 pennies to 0.10, which is 10 cents, 0.20 cents, 0.30 cents. Aggressive trader will up their leverage and bigger their position sizing. So their position sizing might be 20 cents, might be 30 cents, might be 50 cents compared to someone that's more conservative that wants to stick to 5 and 10. Okay, so aggressive trader will kind of up their lot size, up their position size to 30 to 40 to 50, even to $1, $2. Okay, conservative trader will up their upsize to about 5, 2%, 5 cents, 2 cents, 10 cents. Not 20 cents, 30 cents, 50 cents, $1. That's more of an aggressive trader. So that's the biggest difference between a conservative trader and aggressive trader. And what aggressive trader likes to do, they like to use their leverage, and they like to big up their position size. Also, they aim to generate quick profits through day trading. Okay, through day trading, you can generate a lot of quick profits through day trading, which I also am going to show y'all how to really day trade and capitalize off of, maximize your profit off of each trade. They aim to generate quick profits through day trading, where you trade all day and even 2 days, even weeks. You trade months sometimes, which you will see, in examples in here too. They'll show you that. But that's what day trading ultimately is, and you can maximize and get a lot of more money that way, than just taking it out whenever you're in profit. So seek to generate alpha returns and beat the market performs as measures through SPs and 50 index. Aggressive traders also use stocks. Stocks is why they use stocks compared to I teach y'all to only trade currency pairs. Because currency pairs, if you stick to GPU, if you stick to Euro, if you stick to Japanese yen, and you stick to Aussie, Switzerland, if you stick to those pairs, all the USD pairs, all the major pairs, they're like conservative. So they're more, just conservative compared to stocks. Aggressive traders, they trade stocks. A lot of people trade Bitcoins. A lot of aggressive traders trade stocks. I teach you to trade currency pairs, which will allow you to have more flexibility in your trades. It's more conservative. It's not as fast as stocks. Stocks is the most volatile pairs to trade is stocks and gold. Gold is also very volatile, but you can lose your money very, very fast on drawbacks, on pullbacks, because you're trading stocks, because you're trading gold, which is very volatile in the market and forex the market. This is why I recommend, and I'm going to be teaching y'all throughout OnlyFans. You'll see in the later videos that we're going to build your account up. We're going to trade the regular currency pairs, the major currency pairs. We're not going to stick on. That's how you, especially a lot of newbie traders, that's how you blow your account. Trying to trade Bitcoin, trying to trade stocks, even though you can trade Google, even though you can trade Twitter, even though you can trade Tesla, and you can trade Bitcoin. That's the quickest way to lose your money. So I don't really teach that. Later on, I will be getting into stocks because it's very volatile. I actually made about 10 bands one time, on my demo account off of Bitcoin. Also, it was very volatile too, very quick. I made it in like 30 minutes, not even 10 bands. Off a position. My size position, as far as my position sizing was like $1, but I was able to make that. So I understand why people do that, but it's also to a lot of newbies and new beginners. That's not the way we're going to do it. But I want y'all to understand the differences between aggressive trading and conservative traders. Conservative traders, we're aggressive conservative traders too. We don't trade stocks. So that's but everything else as far as the aggressive trade. Okay, now we're gonna see that also. All right, so let's go and explain more. So on the opposite spectrum, we have conservative investors, which are risk averse. In other words, conservative investors prefer more balanced returns, which they avoid high risk investments. So the difference between conservative and aggressive investors is not just about the risk taking, but also about the type of investments they choose. Conservative investors, we're going to choose, like I said, the major pair. We're not going to worry about gold. That's more volatile. That's more for my advanced session. That's more for the advanced sessions and stocks and stuff like that, which we want to get into later on. Right now, we're going to focus on, the majors. So, for example, the government bond investment, conservative investor on the other will be would be the major pairs. On the other hand, an aggressive investor, an aggressive trader, they're more likely going to choose stocks, commodities, ETFs, or currencies, which have a higher risk and are more volatile. Volatility and risk are strongly connected. Volatility leads to more opportunities to earn returns on your investment, but at the same time, volatility also increases the likelihood of specific positions losing money, which you can lose a lot of money. Messing with some of these volatilities currency pairs, like stocks, you can lose a lot of money. So let's see when is the best time to use aggressive stock trading. Okay, so when aggressive trading works best. So coming back to the process of risk taking, you can lose money if you have the best aggressive investment strategy. Spectators are inherently risky. Not only lack of training, but also market conditions can also affect your ability to grow your capital. Also check out the guide to find out how much capital you need for day trading. So we're going to also find out that how much capital we need for day trading. So we have to learn what market conditions are good to take on more risk. So the idea behind aggressive trading is taking on more risk, substantially accepting a larger loss. So aggressive trader will take on a more risk, but they're accepting that they also could take a larger loss. Your risk tolerance will grow, during your portfolio. As you start to build your account up, you'll have a bigger risk tolerance to what trades you want to trade because you have more money in your account. By taking 10 steps forward, aggressive traders will like to take 10 steps forward and 5 steps back. This is the difference between aggressive traders and conservative traders. Conservative traders, on the other hand, other traders' strategies which are more focused on taking just one step at a time. Okay, but we're going to accept more risk when the market is conducive to our trading strategies and to our trading style and strategies. So this is going to differ from traders to traders and strategies that you're using. Okay, for example, if you prefer a high volatility environment, you only want to risk more in the type of environments that you are comfortable in. Like, so for this plan, you is they plan on putting the accelerating pedal on a little bit harder than we would perhaps due to a low volatility trading environment. So, for instance, Bitcoin or gold, a higher volatility, they prefer to go in those high vitalities because those are more volatile than the other currency pairs, stocks and gold, than the regular majors. And it is faster. Uh, so they'll be more eager to get in those trades. So there's no one size fit all trading approach. There's no trading approach. Certain things will only work under certain market conditions. So you have to look at the news. You have to look at the trend to see also how our aggressive trading strategy is going to play out. So next we're going to pull down the curtains and reveal some aggressive stock trading strategies that work. So aggressive trading strategies. In this session, we're going to cover 4 methods to trade aggressively. There are many ways investors can optimally gain, and aggressive trading is one of them. However, far more important is the ability to remain patient and only strike when the ideal trade setup shows. So when the idea and the trade setup, I'm going to show you the setup. I'm going to show you the ideal trade setup. That when you see that setup, that's when you trade and aggressively. So there's going to be some examples at the end that's going to show you that. So this is not about finding aggressive market behaviors, but also your ability to remain patient. You have to remain patient. You don't trade during times that you're not supposed to trade. You trade during the time that you're supposed to trade. Okay? You trade during the London session. You trade during the New York session. You don't trade you trade during the sessions. Okay? You have to remain patient. Don't try to get in early. Remain patient, trade during the times of the session. So otherwise, your own human nature will work against you, and you'll sabotage your own effort and all your money that you work hard for in your quest to become efficient. As we have discussed at the length before, the effects of trading psychology can be very damaging to your profile. So that's why I give you a lot of trading psychology even now, so it can help build your profile up, help build your account up. If you're an impatient trader and try to use aggressive trading strategies, it will typically lead to disastrous results for you. Okay, if you're an aggressive trader and you're not patient, and then you also try to use the aggressive trading strategy, which is not going to work because it only works during a setup. We have trading strategies that we have to follow and setups that we have to, or it's going to lead to a disaster. So before you attempt on any aggressive stock trading methods outlined below, make sure you're confident in your current trading strategy and start by trading on paper. So let's dive into the first aggressive funding strategy. Okay, so adding to winners. As the market moves in your favor, this is one of the aggressive trading strategies. As the market moves in your favor, it's probably easier method to chase profit. So for this, the perfect time to scout into your position is when the market is in your favor. You're already in the trade, it's already in your favor, and then the market pauses for a short period of time. They're called correction, or called pullback, or drawback, and repeats and process continue to add on each pause or pullback. So once you see that pullback, that's the time to add on to the winners. So in this, meaning that you're going to add on every time. So you're already in a trade, you're already in your favor, then you add on every time you see a pullback. But you have to you gotta make sure you want it to go in your direction. Pullback can also tend to be a reversal pattern too. But usually a pullback will just pull back and they'll go back in the direction of the trend, either if it's a downtrend or uptrend. So the theory behind this aggressive trading strategy is to let the winner run and then add some more to increase your profit potentially. So let it run and then add more to increase your profit potential. So this is called add to winners. So the only thing you're doing is adding to the wins that you already won. So it's called adding to winners. Hedge fund billionaire George Soros, the man who crashed the British pound in 1992, said, When you have a tremendous conviction on a trade, you have to go for a juggler. It takes courage. It takes courage to be a pig. It takes courage to ride a profit with a huge leverage. And when you're right on something, you can't own enough. So in other words, George Soros, who is fund billionaire, that what matters is how much money you make when you're right and how much money you lose when you're wrong. That's all that matters. How much money you made when you was right, how much money you made when you lost, when you was wrong. If your initial trade is showing you profit, that's a sign that the market has proven you right. So you want to maximize the outcome of your trades when the market proves you right. Okay, that's adding to the winners. Of course, the downside of this is that when you go aggressive, it leaves you vulnerable. Okay, it leaves you very vulnerable. Okay, aggressive traders are more at a higher risk of lose. They're going in aggressively. So when you're aggressive averaging in a trade, you always bring your average cross price closer to the market price. So a deep pullback. So an aggressive trader can get in a trade, but a deep pullback can wipe out your whole profit and can wipe out your whole account. And you could lose everything, depending on how much money's in your account, all that. So that's one of the strategies. So it's very important that that's one of the strategies is add to winners. The next strategy is trading more markets. So adding more markets into the mix, another aggressive trader. That's another aggressive trader is someone that adds multiple trades to make more money. That's aggressive. You're doing that aggressively. That's aggressive. That's something aggressive to do. A conservative trader will only will only make one trade or two trades or one. Aggressive trader will make 1 to 5 trades, 1 to 6 trades, to increase their money. When you trade more markets, when you trade more trades, you trade more frequently and subsequently have more risk. You're more at a risk when you do this stuff. For example, you include aggressive trades like penny stocks, which can potentially produce higher gains. Aggressive traders work at little bits different than a conservative trader. So they work a little bit different than a conservative trader. As we already learned, aggressive portfolio trends to favor stocks. Okay, they trend to favor stocks. Conservative portfolio, on the other hand, tends to favor currencies. The good idea is that on the U.S. exchange, we can access the big stocks in the world through the news, TradingView. Next, we're going to look into is how to find early entry points for aggressive trading strategies. So for aggressive trading strategies, this is how you find early trading points and strategies, and it does work. It's just 50-50, 60-40% that it can go in your favor. So aggressive entry allows traders to enter the market right from the beginning of the price movement. In other words, we're looking to catch tops or bottoms. So double tops or double bottoms. Here's another billionaire. His name is Paul Turtles Jones, who says about catching tops and bottoms. So everyone says you get killed trying to pick tops and bottoms, and you make all your money by playing the trends in the middle. Turtle Jones, well, for 12 years I have been missing the meat in the middle, but I have made a lot of money at the tops and the bottoms. And we also teach at the tops you sell and at the bottom you buy. So he's saying he's a billionaire. He said he made way more money during tops and bottoms. However, for this to work, timing in the market needs to be on point. Timing the market all comes down to two things: how good you are to pick a good and accurate price level, which we still have to go over price level and price action more, but how good you pick on your price level, and your ability to execute on trades right before the market starts moving. Your ability to execute on that trade right before the market starts moving. So aggressive entry method, for example, is about to be shown below. Is to buy. To aggressive entry method is to buy and sell as the market once those two above trading conditions are satisfied. For example, if your support level during the first 30 minutes after the opening bell, don't wait for more confirmation. You just immediately buy at the market. So for this example, you see the stock chart below. As you can see, the stock trend. This is for Apple. So they're saying immediately once it hits your support level, boom, you immediately get in for a buy, going all the way up for a gain, a nice profit, a nice gain, and the rest is history. Okay, so this is a great trading strategy that a billionaire gave to us to use. So we're going to use that every time. Okay, this is an aggressive trader. The next idea we're going to look on is how to set aggressive market trader targets. So how to set aggressive targets. So the last one was for when to get in a aggressive trading entries. So at the top and the bottoms, and this is now aggressive trading. This is now how to set aggressive targets. That's taking profits. But because bulls markets are different than bearish markets, so bulls means up, bears means down, but it's a difference in how they move for both of them. So in the bull stock market, it's better to ride the trend. It's better just to ride the trend. So it's better for you to just it's better to let the profit build and don't be eager to cash out. So when you get for uptrend, okay, it's better to just let the profit build and don't be eager to take the cash out. It's more like day trading. Oh, you more day trade on the uptrend, okay, and you more scrape on the downtrend, okay, as you will see in this example below. But that's what they're saying for the bull stock market. It's better for you to ride the trend, and it's better for you to let price once you're in that trend and once it's riding, to let it just build up and don't be eager to cash out. That's what they're saying. As far as trading, aggressively. However, in the bear market, you need to be more aggressive when it comes to your profit because downtrends are shorter in duration. They're shorter in duration, and at the same time, pullbacks are short-lived. So in the scenario, it's best to cash in as fast as possible. More like so you more scrape on the downtrend and you more day trade on the uptrend. Stocks, as saying goes, stocks take the staircase up and the elevator goes down. Okay. In other words, drop faster than they rise. So stocks trend to drop faster when they rise. And in the next session, you're going to discover how to find trades using the 1 minute time frame. Okay, so let's go to the 1 minute aggressive stock trading strategies. There's another great stock strategy is the 1 minute aggressive stock trading strategy. Shorter time frames gives you the opportunity to make more frequently trades. If you trade more frequently, you're an aggressive trader. Let's talk about aggressive stock trading using a 1 minute chart. Okay. And the 1 minute chart I do look at the 1 minute frequently in the market, but we want to look at the overall trend, which has to do with the 4 hour, the daily, and the weekly. And we're gonna show you that in this example too, why that's more important too. But the 1 minute for scrapers, for aggressive traders that's trying to scrape the money up fast, trying to get in, get out, get in, get out. This is for you. So 1 minute scraping strategies. If you're an ultra aggressive scraper, we have a strategy in store for you. The trading rules are pretty simple to follow. Bear in mind that you need to be quick and take profits without hesitation. The theory behind this strategy is to buy pullbacks and to buy on an uptrend. So when it pulls back, that's when you want to buy, and to buy when it's an uptrend, and to sell when it's on a downtrend, when it's going down, to sell rallies in a downtrend. So if you need to think about it, it makes sense. So now you're going to learn how to do the statistic indicator as the guide to buy and selling spots. So secondly, we're going to use a trend line to guide the trend. And let's look over a real example on how this works in the stock market. These trading rules can be applied to any other market. Build your own aggressive forex trading strategy. So these trading strategies can be used in any other currency pair or any other trading pair that you want. So this is for the 1 minute Twitter chart below. So it's the 1 minute Twitter chart below. It made a lower high, and then it made another lower high. Once it made another lower high, that's a downtrend. This makes a higher high and a higher high. That's an uptrend, but it made a lower high and a lower high and a lower low, which is a downtrend. So we get in. To draw, so if they draw a trend line, so we need at least 2 points of correction. So 1 point right here and 2 points of correction. We need those 2 points of correction before we draw the trend line to know uh, where we're drawing a trend line. If we're drawing an uptrend or a downtrend. So once we got those them 2 points of corrections, confirming that it's going in that direction, then we draw the trend line. So we got the 2 points of 2 points of corrections. We connect them, and in this stock example above, we have two lower highs as a point of correction, and this indicates we're moving into a downtrend. So we want to sell rallies into the trend line. Okay, so for this, we're going to use the statistic, which is at the bottom right here. This is the statistic. It lets you know when it's being overbought, and when it's being sold. Okay, it's an indicator that can be used. I don't really use that indicator, but it's still a good indicator to use. Use the statistic stochastic indicator to reach an overbought condition as we retest the trend line. So see the stock chart below. So for the take profit strategy to exit strategy, so we need a take profit strategy and we need a strategy. A good place to start is to use the already known strategy like in a preview, but above and below, which is lower lows and lower highs. Once it makes a lower high and a lower low, or a double bottom or a double top, or a double bottom, then it's a reversal pattern. So you can see the stock chart below. So let's look at the stock chart below. Hold on, let's look at the stock chart below. See the stock chart below. Your challenges with scraping strategies will be to find a decent short term and a trading environment. So you were looking for a decent short term strategy, or scraping strategy, because we're scraping right here so we're looking for a decent short term trending environment. The second danger you face here is what you're constantly focusing on a very short term time frame. Since you're constantly on a short term time frame, you miss out what's going on a higher time frame. So on a short time, this is the reason why it could be bad, because you could be on a 1 minute and you could be scraping and making money, because the 1 minute and the 5 minute will kind of like tell you what's going on, like, recently. But on a bigger time frame, on a higher time frame, it tells you what's going on overall. Okay, and this is how a lot of newbies and traders, they look at the 5 and the 15 because that's considered like scraping, but they don't look at the 4 hour or the long term or the daily or the weekly to see what's going on as far as the overall term. Okay, so what's going on in the higher time frame is what's really, really important. So usually the higher time frames are fueled with fire. So smart money moves are over a period of days and weeks. That the higher time frames show you what's going on over the period of days and weeks, and that's how you make big money into the flow markets. Due to liquidity and constraints, you just can't execute off of the big volume off of the trade on the 1 minute time frame. Okay, but you can scrape and use that to the 1 minute time frame. So in summary, aggressive trading, stock trading is not for the faint-hearted. You need to be able to deal with high level of stress and be very quick in your decision making process. This is most important lesson takeaway, is that you need a high to succeed with aggressive trading. Okay, you need a high tolerance a high tolerance of risk to succeed with aggressive trading if you're going to be an aggressive trader. Okay, just if you're starting off, you might want to just be a conservative trader. Stick to one trade, stick to two trades, stick to the majors, stick to GPUSD, stick to Euro USD, stick to the majors. Okay, don't try to trade gold or Bitcoin. That's more for the aggressive traders, more traders that have more money in their account, and that are more risk, that have a higher tolerance to the risk. The risk of losing your money, losing your account, losing your profit. So we encourage you to test these aggressive trading strategies with paper money, with the demo account for first for about 30 days or 60 days before you put actual real money into your account. Okay, because that's putting your real money at risk. So to sum everything up, here are the top 5 aggressive trading strategies. Add into winners, trade more markets, be more aggressive with your entries, have aggressive targets. So let us know, what is your investing style, and are you a conservative or aggressive trader? So thanks for reading. Thanks guys. Thanks for getting this one out the way. So that's how you do. So that's how we. So these are trading strategies when it comes to being an aggressive trader and a conservative trader. So in your next video, we're going to talk more and more about that. Use some more aggressive trading strategies, some more strategies when it comes to trading, time frames when it comes to trading, how much capital you're supposed to have in your account when it comes to trading, and all that. So much more and more content I got for y'all to help y'all along y'all here, going through rough times. So, this can help. It's another income that you can use to help you and your family. All right, so gang, it's your boy Nature, aka Nature, gang.